In this week's episode of the Stockscores Market Minutes, I'm going to talk about what's next after the market has crashed. Do we have more weakness to come? I will then do my regular weekly market analysis. We'll do a market scan in search of opportunity and look at the day trade of the week on AMTX. So the stock market really started its crash in March. It sort of started in February, I suppose. And that gives us now 2 months of extreme volatility in the market. It's been a constant battle between the buyers and the sellers. And of course, the sellers won at first, and then we had a pretty good bounce back as the buyers stepped in for bargains. But there's still a lot of volatility, and I think a lot of uncertainty and a lot of fear about what is going to happen next. And so this week I want to talk about that exact question. What is going to happen next? When one side pushes the market up too far, that side gets fragile, and then you ultimately get a reversal. And I think that may be what is happening. We had a big move to the downside, a big bounce, and in the last couple of days, I've noticed the sellers starting to show a bit of motivation. Now, I'll show you a chart in just a moment that really highlights this. But really what happened on Friday was that there was a break of the upward trend line from a falling top on the intraday chart. And I think that this may set us up for more weakness in the short term, at least early next week. And so in the short term, I think it's important to be somewhat pessimistic. Now, it really depends upon your time frame. If you are a longer term investor and you bought some bargains a month ago, I would stick with those. I think that that's fine. But if you are a shorter term day trader or swing trader, then I think the next wave may be down. Let's look at the chart to see why. One of the things I always like to look for, and I've described here many times in these videos, is breaks of trend lines from falling tops or rising bottoms. And so we had this upward trend line, which has built a falling top from Thursday into Friday, and we ultimately got the breakdown of the upward trend line from the falling top. And that's why I think we could see a few days of weakness here. The market is a little bit overextended to the downside. You can see that there's some distance between the trend line and where prices closed. I think we could try to fill that in first, but ultimately then roll over. But notice there was some pretty big volume at the end of the day on Friday, as perhaps some positions were lightened into the weekend. Now, again, I'm not really that concerned longer term. It's the short term, perhaps a few days of weakness, given what has happened in just the last couple of days. All right, let's get into my analysis of the US markets in general. And here you can see that short-term chart. This is a 30-day, 60-minute time frame, and of course we have the upward trend line, little downward top, and then a breakdown. We may test these lows right in here around the 274 level. That would be reasonable. Until we can break this downward trend line from a rising bottom, I think short-term you need to be pessimistic. Looking at the longer-term weekly chart, you can see that we've had a very big rally to the upside. We hit new highs, local highs in the last week, and then closed below the open. That's why that candle is red. And that's typically a sign that this little rally may be running out of enthusiasm, and therefore I think we need to be careful in the next little while. Do I think the market is going to go to new lows? Certainly it could, but I don't think at this point that that is the probable expectation. So for now, I'm just going to be short-term cautious on the US markets. And the small caps, not a whole lot different. The upward trend line here, however, has not been broken. And so that's encouraging. Perhaps the small caps will simply pull back to that upward trend line and then bounce. And so they do look a little better than the large cap stocks. Moving along to the Canadian markets. And the Canadian market isn't actually as in bad a shape as one might expect given the weakness in oil, because the upward trend line is still intact. Now we ran away a little bit, we're pulling back. We could see a little bit of sideways trading action here in the Canadian market. If the US market suffers a more dramatic sell-off, it will probably pull the Canadian lower, but this actually still looks like a decent chart. And looking long term, yes, we've had that big bounce back. We had the sharp sell off, the big bounce back. Essentially 50% of the losses have been regained. And now the question is, do we simply go sideways, build a base to ultimately launch off of, or are we going to break down and perhaps work on building a rising bottom, which is what typically you see. Typically a downward trend is broken, which we've had done. Then you retest with a rising bottom, and then you make that move higher. I think that's probably what happens on both the US and Canadian markets. TSX Venture has actually been doing pretty well over the last 6 weeks, as gold stocks have a heavy constituency in this market, and that is perhaps why this market has been able to recover somewhat. I think you have to be a stock picker, very specific, look for good patterns on this market, because there are a wide range of companies here, and in general most micro cap stocks aren't doing great, but some of them, particularly in the mining space, are doing okay. Moving along to the currency market, the US dollar showed a little bit of weakness last week. You can see we're building some falling tops towards support. If this support line gets broken, then I would think that the US dollar might make more of a pullback, so we'll have to keep an eye on that. And on the Canadian dollar, it is working on a bottoming pattern, but it has not yet broken this downward trend line. We are building rising bottoms, and we need to get through this resistance level, which would ultimately culminate with a break of the downward trend line as well. No reason to really be excited yet, but at least there is some sign of stability coming back to the Canadian dollar. On to interest rates, and you can see the bond market has been pretty sideways after a lot of volatility in March, fairly sideways over the month of April, and that just means interest rates are low and fairly stable. And finally, the commodity section, the gold market, much like the interest, well, that is actually the interest rate stock market chart. Sorry, I've got the wrong chart in there, but I will tell you that gold has made a big gain and has started to quiet down, started to compress in volatility, and therefore I think it's kind of a neutral chart right now, but the long-term trend is up, and until that long-term trend is broken, I would remain fairly optimistic long-term. I just don't think you want to chase those stocks higher. All right, now onto the oil chart, and there you can see that the oil chart is in that sharp downward trend. It's very oversold. We have suffered greatly in the oil market, but there is still no sign of a break of that downward trend, no build of a rising bottom, and therefore you want to be fairly pessimistic about oil. Now, there is some strength in natural gas, and so some energy companies that have a larger makeup of those natural gas holdings are actually looking okay. So there is some areas of strength in the energy sector, but if you think oil specific, it is not all that great right now. And finally, fear. Well, fear is basically at a moderate level. We haven't come back all the way yet. We have perhaps taken the edge off the fear, but there's still a good deal of uncertainty about what the future holds, and therefore I think it is still appropriate to be fairly cautious on the stock market. All right, so my outlook then, neutral long-term but bearish short-term on US stocks. The Canadian market doesn't look quite as bad. I've got it neutral on both time frames. Long-term gold is still bullish. It is in an upward trend, but short-term neutral as it is going sideways. Oil, bearish long-term. Neutral short-term, it is trying to stabilize, but until we can build a rising bottom breaking that downward trend line, I wouldn't be at all optimistic. The buyers appear tired, and I think that may set us up for some short-term weakness. Now again, I want to emphasize short-term. I'm not talking about a major second wave of the correction, at least not yet. But for now, probably a little bit of a pullback after the recent gains have been quite strong. At this point, a little bit of weakness would only be a pause in the recovery, but we must monitor for a more substantial signal of weakness, and I'll keep you updated here. Volatility is high, which is good for traders. It's a great time to be a day and swing trader. Gold is taking a rest and oil is trying to stabilize, but it has work to do. And as I said, fear is still moderate. All right, moving along, we're going to do a Stockscores market scan. This is the tool on the market scan website where we can do a scan looking for certain strategies. Now, something that I added in the last week for Stockscores members is a pattern called the crash reversal pattern market scan. And we can do that on Canada or the US. I'm going to run it today on the US market. So we'll run the crash reversal US scan. This looks for that pattern that we've been talking about a number of times in recent weeks as a way to bargain hunt some stocks. And so we'll just take a peek at a few here, and I'll let you know if there's anything that I think has promise. So again, to review the pattern, we want to see a break of the downward trend line from a rising bottom on a stock that has suffered a major correction, an emotional sell-off. So for example, this one meets our criteria. You can see that we have the emotional sell-off, no doubt about that, the build of a rising bottom, and last week on Wednesday it broke the rising bottom and then it started to come back again on Friday. I think this setting up for perhaps more gains in the next week or two. SIEN looks pretty good. And I'll just continue to cycle through here. That's the process, is the market scanner will do most of the work, taking our number of candidates from thousands down to 20 or 30, and then we have to inspect the charts for the right pattern. This one also looks interesting. You can see the big emotional sell-off. We've had a little bit of a rising bottom build, huge volume on the Friday session and breaking through some resistance. So I think this is pretty good. It's a little bit overextended if you look at like the 2-minute or 15-minute chart on this stock. It went pretty crazy on Friday, but it managed to do quite well, closing near its high of the day and huge volume. You can see here the number of trades, 100,000 trades on Friday. That's a big number for a small microcap stock like that. Has some decent potential. So again, I just go through the charts looking for the pattern, break of a downward trend line from a rising bottom. And when I see something that has some potential, I can click on the chart, blow it up, and look for other signals that may be important. So there's a downward trend line. You can see rising bottoms being built. Decent little move toward the end of the week. My only reservation here is volume's not all that strong. It's not essential to have strong volume, but it does make it better. All right, so that has been the Stockscores market scan. Let's get into the day trade of the week. And this week we're going to look at a trade that really kind of showcases a concept that I've been emphasizing on our active live daily webinar, where I provide my commentary and we have our algorithms running all day looking for trading opportunities for short-term traders. One of the things I've been emphasizing lately is that many times you have to hit and run. When these stocks move fast, when they make big, quick moves, it's sometimes very advantageous to dance close to the exit door. And by that I mean looking for an exit signal like a break of an upward trend line. So this stock moved very quickly, went up +4 RR from the entry signal, which came at 9:32 on Friday. And then it showed a bit of weakness here. So that would be the most aggressive exit, that first bit of weakness. The least, or maybe not least aggressive, but the less aggressive exit method would be to watch for a break of the upward trend line, which occurred right there at about +4.5 RR. The stock ended up closing the day at actually a negative value. In other words, it went up and went right back down again. And we see that a lot in this market. And if you held all day, the economics don't look all that great. For $100 of risk, you would buy 830 shares. That was $722 of capital. You can't margin this stock, it's too cheap. And it finished the day at -0.39 RR, which meant a $39 loss on your $722 trade, which was a 5% loss. However, if you were a little more aggressive in the exit, this stock gained as much as 7 RR, as much in a max gain situation of $700 or a 97% return. Of course, we're not going to get out at the highs. We don't expect that. But still, a +4.5 RR meant a $450 gain on a $722 trade based on $100 of risk. And that made it a pretty decent situation. All right, well, that has been the Stockscores Market Minutes for May 4th. May the 4th be with you, 2020. I hope that you've enjoyed it. Please click on the like button if you have, subscribe to the channel, and most importantly, trade well.